Hi everyone, welcome to today's Monday market update. I will say right off the bat that this is the first time in a while that I have actually really liked Bitcoin, where it actually sits. And I'll show you why in this session. Before I continue though, just want to let you know Joe's in Melbourne right now. He's doing a couple of events. One is private. Tomorrow night he will be doing an in-person intimate event where he goes through everything that he's seeing and walks you through a lot of his philosophies, which is just an amazing night. So if you're in Melbourne, want to see Joe in person, click the link below and you can catch up. Okay, let's get straight in. So the big reason why, and I think we don't want to miss the forest for the trees, and that's what I've been thinking about over the last week or so, is we can get pulled into this week to week, almost day trader mindset where sometimes we want to sit back and go, all right, cycle wise, where are we at? Now, each cycle does not play out exactly the same as the last. We've experienced that time and again. For example, last cycle we had an all-time high before the halving for the first time. In this cycle as well, we never really had that extended move up. We did in 2017 and 21. We did not get it this cycle. This is a fundamentally different phase with the ETFs and this institutional demand. And the macro is so unstable. It is crazy. We know with the Middle Eastern war, energy shocks, and it's very similar dynamics to COVID. I'm not saying we're going to get, COVID-esque movements and lockdowns, all that kind of stuff. No. But when you remove a certain amount of global energy, when the world is so reliant on a certain sector, it's bad news. It causes inflationary spikes and a lot of disruption and tightening. Central banks just go, uh-oh, instead of the cutting that they've been doing, they suddenly move into holding and maybe going higher. But energy shocks, as we've seen previously, are a short-term phenomenon. It will get priced in and it will move lower, but media panics, people panic. So far, it's actually been pretty orderly. What I was watching specifically, S&P 500. Now, was down 50% at its lows, while the S&P 500 was just grinding higher. Gold grinding higher. Silver, just blow off. So gold and silver had this beautiful blow off. I actually think gold is topping out against Bitcoin, which I'll go into in a sec. But this here was my just one to watch, the test, which is if the S&P 500 nuked, which it fell, was it 5%, over the last few days and weeks. I have down here a nice big V. That would be a 10% move for the S&P 500 down here, if I'm not mistaken. Okay, a little bit more. Let's just bring up the volume profile. Yeah, so the 6,000 level in the S&P 500 looks really enticing. Now, does this matter at all? Well, that was the point, because Bitcoin and the S&P 500 have been doing completely different things for the last 6+ months. So in my head was, all right, previously Bitcoin acts as a high beta tech stock, essentially, following those high movement tech stocks. Of late, though, it's been following software. There was a software ETF. You can bring it up and have a look. Bitcoin's been following that almost to a T. Bitcoin is not software in the sense that the ETF tracks it, but it's funny how correlations suddenly develop and then they break. Again, I don't want to get lost in the weeds there, but the S&P is such a core driver of liquidity and overall outlook of the US economy. If this fell over, okay, Bitcoin's down 50%. Does Bitcoin drive down lower? It didn't, and it hasn't. So that tells me there is some relative strength there. The marginal seller is at exhaustion level. And if any uptick in demand begins to roll into the market, Bitcoin can shoot up pretty hard and pretty quick. Now, I'm looking at a region of here to 80,000. And when I say don't miss the forest for the trees, well, if we go over to my cycle map, and I'll just go out to the weekly timescale. In fact, maybe there's a better. Yeah, this one's better here. So I posted this to the masterminds yesterday to just have the big picture perspective. If we are living in a simulation and we are going to follow the exact path of the previous cycle into that FTX just horrible shenanigans, then we're probably about here, where we've had the fall over, we've come back into the 10 EMA on the weekly, and we're about to have that next drive down into the 200. You can just see how close we are to all of that. We are following the movement very closely, albeit this is much sharper, which gives me a little bit more hope than that we can bounce back up here. But if we have a look where we are at the two different areas, we're holding up higher here. Plus, if we look at the weekly RSI, so this is a big indicator for me to assess extremes in the market.